and I have the privilege of serving as Dean of Hofstra University's Frank G. Zarb School of Business. It is my pleasure to welcome you to our annual Meet the C-Suite event. While we are disappointed to not be meeting in our beautiful new building on campus, one thing this year has proven is we can still provide great conversations and learning experiences virtually. At Zarb, we believe the best education blends the science of business with the practice through real-world application. From the moment our students step on campus, they begin to learn on the same tools used by industry. For example, in our Martin B. Greenberg trading room, equipped with 34 Bloomberg terminals, one of the largest and most technically advanced academic trading facilities on any college campus, every Zarb student has the opportunity to earn the Bloomberg Market Concepts certification, which introduces the financial markets and covers topics such as economic indicators, currencies, fixed income, and equities. The trading room, designed to replicate a Wall Street trading desk, is home to our student-managed investment fund, which provides the opportunity to manage an investment pool of real money for our students. And I must add, they are doing very well, having outpaced the market benchmarks since the fund began in December of 2016. And I might just brag a little further to let you know that as of September 17th, which is the latest data that I have, the equity portfolio has produced a cumulative return of 58.35%, beating both the Russell 3000 and the S&P index, the 500 index. Events like today underscore the Zarb experience by learning directly from industry leaders, and we are delighted to have two very special executives joining us today. I know that our students and the many alumni watching are looking forward to the conversation. Before we begin, let me briefly introduce both of these top executives. Adena Friedman became president and CEO of Nasdaq in 2017 and is a member of the board of directors. She brings more than 20 years of industry leadership and expertise and is credited with significantly shaping Nasdaq's transformation into a leading global exchange and technology solutions company with operations across 6 continents. She has served as a Class B director of the Federal Reserve Bank of New York since the end of 2018. At the beginning of this year, she was elected to the board of directors of FCLT Global, a nonprofit organization that researches tools that encourage long-term investing. Our moderator this morning, Stella Mendes, is a Hofstra alumna and trustee and currently serves as Senior Managing Director at FTI Consulting, a global business advisory firm. With over 25 years of banking experience, she previously served as President and Chief Operating Officer of First National Bank. She also served as Compliance and Bank Secrecy Officer and interfaced with all phases of the regulatory process and bodies governing that activity. Before being named President of First National Bank, she served as Executive Vice President and Chief Retail Banking Officer. Please join me this morning in welcoming both Adena Friedman and Stella Mendes.
Good morning. Thank you, Janet, so much. So first and foremost, Adena, thank you so much for joining us. It's a real pleasure for me and an honor to be able to, although not sit side by side with you this time around, although I was really looking forward to that. We'll pretend that we're in the same room and or at least near each other for today. But I'm thrilled not only as a professional, but as a woman and being in the business and as a Hofstra alum. I think this is terrific, not just for anyone in business, but for the students in particular. So thank you very much for your time. We know how busy you are. And before we jump into some questions that Adena and I are going to kind of try and cover some ground, there'll be time at the end for questions. So please, we hope that you will ask questions. And, you know, we want this to be as useful for you all as possible. So with that, to set the stage, Adena, can you share how Nasdaq has transformed from a traditional exchange into a technology company serving as leader in the space?
Sure. Well, first of all, thank you so much for having me this morning. It's really terrific to be here. And I also am really sad that I don't get to see the great campus. And you know, it's always wonderful to be able to be in person. But thank you for having me. In terms of NASDAQ, the journey has been an interesting one. And obviously, many of you probably know that Frank Zarb served as the CEO of NASDAQ for several years. So, and I've been with NASDAQ since 1993. I took 3 years away to work at Carlisle for 3 years, but otherwise I've been here my whole career. So I've really seen the evolution of NASDAQ from serving as a great U.S. capital market, and we always have, and we always will be, a wonderful, wonderful equities exchange here in the United States, but then broadening out to also become one of the largest options markets in the United States. We also provide a trading, treasuries trading technology for the U.S. We own and operate many of the exchanges in the Nordic countries in Europe. And through that acquisition that we made back in 2008, where we bought the companies that do operate in the Nordics, we also were able to acquire a business that provides technology to exchanges around the world. So for the last 12 years, we've really focused in on growing and expanding our technology capabilities in our technology business. The trading, clearing, settlement technology that we use for our own markets, the market surveillance technology we use for our own markets, we now provide to over 120 other markets around the world. And we also provide the same trading surveillance technology to the broker-dealer community. And then lastly, we have a large and scaled index business. And we have about over $300 billion of assets under management tied to our indices, and a very scaled data and analytics business too, serving the investment management community. Many of the levels of expansion we've had have been done through acquisition, but some have been done through organic growth, like our index business and our data business, to make sure that we're really optimizing the experience that investors can have and market participants can have in the markets. So we're pretty excited about how we've grown and expanded into a technology provider.
That's great. Thank you. So what can we expect in terms of technological innovation or change at NASDAQ and maybe exchanges in general?
Well, it is something that we focus a great deal of our energy on, both at the executive level and of course within the technology organization, is where are the market's going, what technologies are really going to be critical for the success of the capital markets going forward. And the areas that we've been most focused on have been in really leveraging the cloud, because the infrastructure that is used to power the markets around the world today is very intensive. You know, if you think about our infrastructure, we have to support more than 60 billion messages flowing through our systems in a given day. And then we also have to support that in 20 microsecond type latency experience for our clients. So it's a super scaled, high throughput, low latency solution that creates just an incredible actually engineering challenge, but also opportunity for great engineers to kind of become involved in what we do. And that today, of course, is an on-prem, we manage everything through our own data centers. So do almost every other exchange around the world that's an incumbent exchange operates out of their own data centers. But as we look at the power of the cloud and understanding the fact that we can create a more globalized system, more globalized connectivity, make it so that markets can operate more seamlessly over time. If we can leverage the cloud, I think that we're going to find more and more that certainly any new market that we build and deploy today primarily is actually in the cloud. And then the many incumbents that exist are starting to consider the cloud for their future. The second major technological trend is machine learning. And I think that there are many, many applications of machine learning in the financial industry. I would argue that machine learning probably will have the most impact on the industry in the long term. But within the exchange business and certainly within the capital markets, there are three ways that really machine learning, I think, will evolve the system. So one is on just efficiency, just finding ways to replace inefficient processes with more efficient processes in terms of allowing machine learning to come in and create efficiency in terms of repeatable processes. The second is in terms of defense. And that's where we really have focused a lot of our efforts in machine learning. How do we leverage machine learning to root out nefarious behavior very early on and make sure that we are on the forefront of finding new patterns or other things that may negatively impact the market quality? And that's a big part of what we provide, because our surveillance system is used by regulators, exchanges, and market participants around the world. So we want to be on the forefront of technology in that defensive side. And then the third thing is offense. So looking at predictive analytics and other things that help investors and traders make predictive decisions, and leveraging the vast amounts of data that are out there, turning data into intelligence that drives investment decisions. So I think that we're going to find that machine learning has a huge impact. And then the last one that everyone talks about is blockchain. But I would argue that blockchain is more of an evolution than a revolution. Another exchange executive mentioned to me, he said, if you think about the exchanges, we're like a wolf pack, and we have to make sure that there's some that are right on the forefront of innovation. And then there are others that are laggards that are smaller and less capable of change. And exchanges, we have to be on the rear guard, making sure the whole industry moves forward. So while we can implement blockchain technology easily within our infrastructure, it's really the entire ecosystem that has to adopt it, and that becomes more complicated. So I think that blockchain will continue to become more bigger inside of our industry. I think it'll take longer. Long
Yeah,
answer.
Sorry. Yeah, no, that's great. And yeah, I mean, the machine learning is something that we see in our business every day, and that we talk about a lot, and not just from the defensive side, but the offensive side, and how helpful that can be. So I think that more to come on that, and an interesting way to think about cryptocurrency from your perspective. That's really great. Thank you. I know that there are many students here in the audience that would like to learn more about exactly what you do at Nasdaq. So can you tell us a little bit about what your day-to-day looks like? Maybe not now in COVID, but normal, because the at-home day-to-day maybe is a little bit different than the in the office day-to-day. But just to give us a sense of what it looks like to be in your shoes today.
Sure. Well, I really enjoy spending time with clients, and I have the opportunity to have clients all over the world, whether they're listed companies that come and list on Nasdaq, or market participants who trade in Nasdaq, institutional investors who invest through our systems and using our data, as well as other exchanges around the world who leverage our technology. So I do in a normal environment, I travel all over the place, meeting with customers. And I would say that's probably about 20 to 30% of my time, more like 30, is really meeting with customers and key stakeholders that really drive our business decisions and strategy. Then another 30% of my time is spent on, working with the team. So we have a very specific schedule that we have for management meetings, for one-on-ones and for key project meetings. And I would say in a normal environment, that's about 30% of my time. The nice thing about COVID is because there's no travel, I would actually say that's more like 40% of my time today. And maybe even 50 at times. We've had to make a lot of decisions to manage through this environment, but we also have just more time to spend with each other, even though it's virtual. So that's elevated a little bit. About 10% of my time is on working with investors. We're a publicly traded company ourselves, so I'm making sure that our own investors understand our story, and working on governance matters, whether it's board meetings or things that obviously manage to our investor owners. So I'd say about 10% of my time is doing that. And then the rest is on, meeting with the community, meeting with regulators, meeting with other key stakeholders who have an influence over the success of our business, and just making sure that they're aware of all of the, elements of who we are. We're a highly regulated business, so the regulatory connection is important.
Yeah, that's great. And so we talked a little bit in your first answer about technology trends and what you're seeing. And as we think about COVID and kind of how it highlighted some of the things that we're seeing, right? Who would have thought Zoom would have been what everyone is using, or Teams, some of those technologies that maybe we knew existed but weren't using to the extent that we are now. What are some of the technology trends that you think will define the industry going forward?
Well, I do think I mentioned those three, but if we think about kind of what are the technology trends that will define a new way of working, I think that certainly you've mentioned a couple that we have relied on very heavily, which are Zoom and Teams. I think we're seeing, for instance, that we've had actually a very successful year in terms of new listings coming to market, which I don't think everyone would have predicted back in March. But we'll talk about that in a few minutes. But one of the things you've seen is that roadshows are no longer actually on the road. They're all done remotely. Well, that's made them a lot more efficient. And so you can instead of taking 2 weeks to go on the road and try to find investors for your company, you can probably do it in maybe 4 or 5 days of just back to back on Zoom. And I think that that's been a real adjustment for the investors, and frankly a huge opportunity for the corporates, because one of the hardest things as a CEO is time management. It's you just get so many pulls in your time. If any way to make things more efficient is a win for the CEO. And so I think that we're going to find that more of those types of activities can be online permanently. I think also that business travel will be more deliberate for a period of time. I think that there were times when I've done day trips to Asia. I would say that's less likely going forward, because that is so effective for us to communicate and meet with each other. There are times though when meeting in person is absolutely the most important thing you can do. Establishing relationships,
right?
Meeting new people, finding new opportunities, new customers. Those are all things that are so much better when you can bring people together, and you can have, and also then collaboration and innovation. Those types of things, that the hallway conversations to me can be just like the highlight of my day. I stop an employee and we talk for a few minutes and they give me an idea and I'm like, oh, let's take that. So I really, really miss that. So I'm hoping that we can see a return to that. But technologically, so I think that you're going to see all of these workflow tools, distributed workforce tools are going to become much more of a permanent part of who we are.
Yeah, I agree. And I agree with you about the hallway chatter. I think that's, I would say from my perspective, I'm probably connecting more with my team than I ever did before, because you're not traveling as much as you were. But that kind of quick chat without being scheduled is I miss that as well. So switching gears a little bit, I want to talk to you about cooperative capitalism. And so that involves companies being the driving force behind making social change, right? Can you talk about why cooperative capitalism is important and how Nasdaq is helping move the needle forward through its purpose initiative?
Sure. Well, cooperative capitalism is a concept that we've been talking about throughout the year. And in fact, actually, prior to COVID, it was something that we really were starting to talk about with other CEOs, to talk about within large corporate organizations like the Business Roundtable. And I think it really started with the fact that the Business Roundtable did change the kind of what is the purpose of a corporation. And if you think about in many respects, what the Business Roundtable described was common sense and was certainly the way that many companies already operate. Right. But to be able to put it on paper and to say definitively, the purpose of a corporation is to serve your customers, your employees, the communities around you, your suppliers, and to deliver long-term shareholder value. That kind of collectively, it makes a lot of sense, but it allows us to broaden out and say, okay, well, what are we doing to serve our communities? What are we doing to serve our employees? How are we managing our suppliers? Are we thinking about diversity in terms of suppliers? Are we thinking about how to optimize the diversity of our organization? And those are conversations that I think really kind of went from maybe lower down in the organization to boardroom conversations on the back of the purpose statement from the Business Roundtable. And that's including within Nasdaq. So our purpose statement has changed, and we've been working with our nomination and ESG committee and at the board with the board to make sure that we're all marching down the road of really focusing in on shared growth and prosperity, and leveraging our foundation and the Entrepreneur Center, which are two philanthropic aspects of Nasdaq, to really focus on diversity and entrepreneurship, serving underserved communities with financial education, and making sure that we really are trying to lift everyone up in terms of having the opportunity for shared growth and prosperity. So that's our purpose initiative. Cooperative capitalism goes back to what is every company doing to make a difference in society. And I think COVID has really kind of highlighted some amazing activities that companies are doing. Yeah. And frankly, just weren't getting the attention before, but they were able to step up. So, changing over your manufacturing plant to create PPE that we really needed at that time. I love this one story of a grocery store that basically recognized they have all these relationships with local farmers. The supply chains were getting really messed up. They bought a lot of the produce from the local farmers that otherwise would have gone rotten. They bought it and then they donated it to food banks. So they leveraged their own supply chain capabilities to bring that in and make sure the food banks had enough food to serve the communities and in a time of need. So I really think that more and more companies through COVID have recognized their role in society is really important. And I believe it's going to create a lasting change in the role of companies and that sense of cooperative capitalism going forward.
That's great. That's a great story to, about how to use your resources in a way to help not just your own company, but others around you, the communities that you serve. So that's great. Earlier this year, you published an article, 2020, a year for optimism among growing concerns, in which you commented on trends shaping the future of capital markets. And one of the trends that you mentioned is market inclusion versus market regulation. Can you expand a bit more on this trend?
Sure. Well, first of all, I wrote that in January.
That was going to be my next question. Would you have done something different, knowing what was coming ahead?
There were certain things that I think we're facing, whether we're in a COVID environment or not. So, but certainly the idea of market inclusion as opposed to regulation. So that what we're trying to get at there is, there are a lot of technologies that are coming into our industry. There are a lot of ways for us to bring more participants into our industry and make it so that finance, capital is available to a broader swath of individuals. However, the regulators have to embrace this concept, embrace it as well. And so are the regulators going to help the industry move forward and using technology? Or are they going to become an impediment? And I'll give you an example. And I think it's actually a perfect example of everyone has the right intention, and whether it's the regulator or the firm, but we have to find a way to create a construct that works. So the application of machine learning into the banking world has become a real challenge, and for good reason. So. Right. Are the algorithms that are underpinning the machine learning, are they explainable or not? Do you know what inputs are generating an output? Well, I can tell you in the use of deep learning that we've had, you can understand what inputs you're putting in, but can you always understand exactly how the machine got to the output? And the answer is, that's the whole point of learning. The machine is learning. So yes, you can tell them how the original algorithm was going to generate an output, but as the machine learns, the output could change. Well, that is actually very important for us to be able to use that type of technology on the defensive side of the industry. I always say the bad guys have no rules. They're not operating under any sort of rule book. They're using every technology available to try to find a way to manipulate the market or to kind of come in and frankly use the system for bad purposes. We have to be able to apply that technology to really optimize our defenses. So we have to find a way for regulators to help us figure out how can we apply machine learning, even if we don't have a completely explainable output every single time. What they're concerned about, and for very good reason, is that the outputs could create an unconscious bias in the output that is actually socially harmful. And they're absolutely right. We have to find ways to make sure that we're doing this the right way, but still being able to leverage the technology. So that's really what I was trying to get at in those comments.
Thank you. You also participated in The Economist, The World in 2020 issue with ideas for modernizing capitalism. In the article, you stated that 2020 will be the year we begin to determine whether free markets are strong enough to stand the test of time. Certainly this year was a test for all of that and more. You also stated that we will exit 2020 ready to seek common ground. Now that we're close to the end of 2020 and have gone through this pandemic, just wondering what you would say we would have done to move the needle. What would you say we've done to move the needle toward that common ground? And would you say the concept of inclusive capitalism has been part of this effort?
So the first comment is this concept of free markets. And I think that it's an interesting issue, right? So I think that on the one hand, we've seen the effect of protectionism and where, frankly, in some cases, free markets can break down. If you have a crisis like the one we've had, every country wants to make sure it's protecting its people. Every country wants to make sure it's getting its people the supplies that they need, the food and necessities that they need to manage through the crisis. And at the same time, we sit here in a completely global supply chain world today. And so this idea of both making sure that every country feels they can serve its people while also managing to free markets and making sure that the global economy can function is a real challenge. And I think it's been heightened with the COVID situation. So do I think free markets will stand the test of time? I actually do over time. I think that there are going to be moments or pockets of the markets that do become more nationalized or nationalistic for a period of time before reopening up. But at the end of the day, I think one thing that we can recognize, though, is that the free market system does allow for the most people to benefit globally. But you have to make sure that you're thinking that through in terms of the micro impact on particular people within your country. And the free market economy also makes it so that the most goods and services are available globally because of the fact we can leverage the strength of every country to manage supply chain. So I think that's it's going to be an interesting test over the next several years to see how that propagates on the back of the crisis. I also think that in terms of free markets from a capital markets perspective and the free flow of capital, that's been one of the areas of the economy that's worked the best. And you're seeing, the capital markets really being leveraged to raise capital for companies in times of need, raise capital for companies in times of opportunity, and really leveraging the fact that the capital markets have actually remained very smooth, partially with the help of the Fed, but partially because of the fact that it is such a global system, it's such an open system, and investors of all kinds can come in and benefit from the system that exists. So I do think that is actually, I think if anything, we've elevated that as being a core part of the global economy.
Great. How do you predict inclusive capitalism evolving in the near future?
Yeah, I think that goes back to this idea of cooperative capitalism. They're kind of the same. But the one thing I think we have to recognize is that capitalism is not a fixed system. It's an evolving system. And it's had many iterations over hundreds of years now. So I think that we recognize that this idea of shareholder primacy versus shared primacy in terms of allowing companies to consider other constituents in delivering long-term value to shareholders is a key part of the evolution of capitalism. And I think we're starting to see that play out, as I discussed a few minutes ago.
Yeah. And as we talk about the pandemic and kind of the effects it's had, we had seen a slowdown in IPOs at the beginning of the pandemic, but they seem to have steadily picked back up. Were you surprised at how many companies have gone public in recent months? And what is your outlook for the future on that?
Well, certainly. So I can tell you that in April, we got on our quarterly call and we talked about what we were expecting to see. And so coming into the year, we expected a very healthy IPO environment. We saw a pipeline that was extremely robust and it was carrying us through the year. And so we knew that there was there were a lot of companies that were planning to tap the capital markets. And then March hit and the markets obviously went into a state of crisis. And at that moment, we thought, I guess this year's gonna be a lot different than we thought it was gonna be. Then the Fed action that was taken to really stabilize the capital market system generally. I mean, they did not have to come and inject themselves into the equity capital markets at all, but they did shore up, the commercial paper markets. They shored up the repo markets. They shored up the treasury markets so that we knew we had a functioning system and we had ready access to capital. And of course, the interest rate environment came down. So that made it a much more friendly environment for companies to consider tapping the public markets. It also made other alternative investments less attractive, right? If you have a super low interest rate environment, it's hard to make a return on anything in that part of the capital markets. So it moves people towards equities. Yeah. We started to see companies coming back in healthcare companies, biotech in particular, that were leaning into the trends that were coming on the back of COVID. Then we started to see some really interesting tech companies like ZoomInfo and others be the first to come out and say, look, our market model or our business model actually leans into the trend of a more remote environment. It also, and/or is completely unaffected by it. So you saw tech companies starting to come back in, and then everyone realized, wow, there's a lot of investor interest in getting a return. There's a lot of investor interest in tech and healthcare. There's actually investor interest across, and we now have every sector tapping the public markets, and it really kicked back into gear. And at this point, we're having one of the best years we've had in over a decade. Wow,
that's great. So we've talked a lot about technology at the beginning, and now a little bit in this conversation. How is Nasdaq using technology to take capital markets into the future?
Yeah, so we're really focused, as I mentioned, on how we can leverage the cloud and anything that's, I would say, not latency sensitive. So we're focused first on the non-latency sensitive data and processing that we have. So the trading itself is super latency sensitive, but all of the services that surround the trade are less latency sensitive, and they can really, really benefit from the cloud infrastructure. And any new service that we have, several SaaS services that we offer in terms of data analytics and alternative data. And so all of those services and workflow tools, they're all essentially cloud-based. So I think, and then we've built out a new marketplace services platform that's completely native to the cloud. So cloud is a huge theme for us. The second is machine learning and really focusing in on both the defense, as I mentioned, and looking at using the alternative data to find predictive signals is the second area. And then I think that, and then also at the end of the day, blockchain will be a long-term trend. New markets that launch, we have a fully blockchain enabled end-to-end trade lifecycle capability. And so new markets are looking to launch in that format, but incumbent markets like ours and other large scale markets around the world are definitely seeing that that's a much slower migration to that kind of technology.
Yeah. Thank you. Can you share the big picture of how you used your industry leadership and experience to transform Nasdaq into the leading global exchange?
Well, I think that it's really been the journey of several CEOs. So, I think back to the 90s when I first started at Nasdaq, and we really were focused on being a U.S. equities exchange. But when Frank Zarb became CEO, we started to have much more global ambitions, and we started to actually work with other countries to help them develop their capital markets. We also launched the QQQ during his tenure. So we made the capital markets more, or at least the Nasdaq stocks, a lot more accessible to average retail. And then when Bob Greifeld came in, there was in that period of time, he was the CEO before me. That's when we really started really taking advantage of the mergers and acquisitions that we did to branch out into options, branch out into Europe, and then branch out into technology. And I think that the effect of that, and I was the head of strategy at that time, was really to globalize our business and make technology the driving force of everything that we do. I've had the benefit of coming and then becoming CEO with all of those assets available. So I have the chance to then optimize the business in terms of really honing in on the core services that our industry needs to operate efficiently, effectively, and safely. So whether that's corporates in the IR services and governance services we offer, or whether that's investment managers in terms of the data analytics we can provide them, or whether it's other exchanges, and making sure we're really modernizing the technologies to serve the capital markets. We have and then market participants in terms of all the surveillance and defensive capabilities we offer them. We have the chance to really be a great partner across all elements of the capital markets, and I'm so excited about the opportunities we have ahead of us now.
That's great, thank you. So this happens to be one of my favorite questions, and I've seen some of the questions come in around the same topic. So obviously many are thinking about this. You are the first woman to lead a global exchange company. What types of challenges have you faced as a result of that, if any, and how did you overcome them?
Well, I can say as CEO, I have not faced any challenges. So, coming in as CEO in 2017, it's been a wonderful experience. And I have experienced, the respect of everyone I've worked with and everyone that I've met, and it's been fantastic. I think coming up through the organization, I have to say, I've said this many times, I've had a very, very positive experience working in financial services as a woman. I was able to work part-time after the children were born. I had a great manager early in my career. I would say a very forward-leaning manager, even though he'd been with Nasdaq. Actually, I think he was 25 years in, or maybe 20 years into Nasdaq by the time I worked for him. But he understood what it meant to try to enable a career when a woman in particular is managing and juggling the start of a family. And so he gave me the opportunity to work part-time, and even during that period, he promoted me twice. And so I was able to work part-time and then come back full-time as I took a larger leadership roles. Frank Zarb took a huge risk on me and made me the head of the data business back in, I think, either 1999 or 2000. And I was the first woman to run one of the leading, biggest businesses within Nasdaq. And it was a new business that he had formed. So he took a big risk, and I was pretty young too. And so I had that experience. And then from there with the next CEOs that came in, particularly Bob, he just continued to figure out how much scale do I have? Yeah. He kept saying, I kept testing your capacity. Yeah. And saying, could you take the next thing? Could you take the next thing? And, but these people took risks on me. They didn't have to do that. So I've been extremely fortunate to have frankly, a very positive experience in the industry.
Thank you. And so that's one of the reasons why it's one of my favorite questions, particularly for you, because I have heard you say that before. And I think that there's a lot of positive experiences that women have. I have had many great mentors in my career that have been men that have taken chances and risks. And so that's why I always love for people to hear that from you, because it exists, right? There are people out there that are supportive, whether men or women.
Yeah, absolutely.
So I think it's great for students to hear that you're a great role model to not just women, but to men and to anyone aspiring to be in the business world. So thank you for that.
Sure.
So we've talked a little bit about this in the past, but how is Nasdaq helping companies navigate global environmental, social governance, ESG data reporting? That's become increasingly more and more important. So maybe give us
it's been a really interesting phenomenon. I think we've been fortunate because of the fact we operate many of the exchanges in the Nordics, and we have a very large operation in Sweden, where ESG is really a huge part of the society and the societal norms, and whether that's in the Nordics for sure, but then also propagated through Europe. So this concept of environmental, social, and governance practices, and the need for companies and investors to be really focused in on the sustainability, making sure social impact and governance, and making sure that we look and modernize our operations, modernize the way we do things to create a more sustainable world, and one where more people can participate. I think it really started in Europe, and it's become a very mature part of the investment landscape there, and therefore companies are very focused on that as a core part of what they do. Well, in the last, I would say really 2 years, it's really come into the United States in a way that has created a movement that has changed the way companies have to think about their operations, the way that investors have to think about who they're investing in and why. And the reason for it, and really frankly, the catalyst for it, is the next generation of investors. The young investors that are either investing in a mutual fund or investing in an index fund or investing in, or an ETF, or they're putting their own money straight into the market. They care deeply about how the corporate world is contributing to creating a more sustainable world. And so they're asking questions, and they're making decisions with their money to say, I'm going to put my money into something that creates a positive impact as opposed to a negative one. And that has therefore forced a lot of companies to rethink things. Well, what happens when a new phenomenon comes into any ecosystem? You have kind of proliferation of opportunity. So you kind of have that classic product life cycle where you get a lot of hype and you also get a lot of new players. Well, you've got all these new firms coming in and becoming rating agencies for ESG and creating scores and other things for investors to use to evaluate companies around their ESG practices. But there's no common standard that companies have to use. There's no common reporting protocols, even though there are several that have been trying to create more standardization, but now they're like many of those too. So as a company, you're sitting back saying, gosh, I've got all these investors sending me questionnaires. I've got all these rating agencies taking my public statements and rating me, but I don't really know how they're doing it. And I don't know what they're using. Right. And I've no common standards of reporting to a government body to help me figure this out. So what we're doing is Nasdaq, we have 3,000 listed companies here in the US and 1,000 in the Nordics. And we actually serve over 6,000 companies around the world with our investor relations and governance solutions. Is we've actually we actually bought a small company that has created a reporting tool where you put in all of your ESG information in a specific format into our reporting tool. And we then map it out to all the rating agencies in terms of making it so that they can take that. We put it in once, we distribute it to many, and we map it to their protocols. The second thing is that it therefore creates also a repository for you around that ESG information. As a company, you can look at trends over time in terms of how you're progressing. And I think that it makes it so that we want to continue to make it so we can also deal with individual investor questionnaires over time, so that it's at least a more streamlined way for companies to deal with this very fast changing environment.
Thank you. I think we've made some strides in making the finance industry more diverse and inclusive. I think we have, obviously a lot more work to do. But can you comment on where you think we are and what more needs to be done?
Sure. Well, I do think a lot more needs to be done. But if I were to say, from a gender perspective, I think the industry's much, is moving along quite well. From an I would say ethnic diversity perspective, we have an enormous amount of work to do. So the gender diversity, though, has been an area of focus for this industry since the 80s. And so if you think about the 80s, there's a lot of bad behavior that was highlighted, and was, the media really took hold and really called out the industry for some really bad behavior. And so since then, all of the companies in the industry have had to really think through what are they doing to make it so that there is more parity. We are far from having complete parity, but a big bank executive asked me recently, if this were a baseball game, where would we be? And I personally think we're probably in, the sixth inning. I think that the practices within the firm, so you've got a lot of protocols and practices across the financial industry that try to support women, try to keep them in the industry and help them manage their careers. I think you also have the heart of the people now. Like it started off as, I guess we have to do this, and now it's, I want to do this. I want to find a way to make it so that we can create a more inviting environment. But there are a lot of old processes and old practices that make it harder for working moms to navigate that career and still progress as fast as their male counterparts, and try to create balance. So I think that technology will continue to become an enabler. I think that the banks and the industry in general are fully aware and embracing what can they do. They're constantly asking for solutions. And you're seeing more and more women at the very top of major banks. I mean, Jane Fraser is obviously a shining example of the first, very large scale global bank to have a woman as CEO. But there are a lot of women right below CEO level right now within the banks. And I think that that's a real testament to decades of effort. But it also takes that long. So if you then apply that to ethnic diversity and racial diversity, I think we really have not embraced our role in the same way. I think that there are certain firms that have done a lot, and I think other firms are just starting the journey. So I would put us at inning 2 And I would include Nasdaq in that. We are. I think that we still have room to go, certainly in terms of women and creating more parity with women in the company. But we also have done a lot to support and make sure that we are creating a great environment for women to thrive. I think we have work to do, particularly in racial diversity. And so we've actually engaged our employee network, our Black employee network, to really help us figure out structurally what can we do to make a material difference. And then we've actually published our stats, our diversity stats, for the first time, so that we hold ourselves accountable to progress. But it's going to take time for us to make sure that we are doing everything we can for our company to represent the communities where we operate. But if we are dedicated to that, I do believe that we can make a real difference.
Thank you. I love that baseball analogy. I'm going to use that. I don't love that we're in the second and sixth inning, but I think that thinking about it that way, I think is certainly very helpful. So what advice can you offer for students looking to go into financial services?
Well, first of all, don't think of it as I'm going to go into one sleeve of financial services. Financial services is actually a huge industry. So, you think, oh, I want to go become an investment banker. Well, if you think about the investment banks today, many of those investment banks are asset managers, they're investment banks, they're commercial banks, they're retail banks. They have a lot of different elements to their operations that are all really, really interesting and very different from one another. So if you do end up landing a job inside one of the large scale banks, make sure that you educate yourself on the other aspects of the bank. Don't just, in a way, pigeonhole your own career into one element of the bank, because you might find that that's not really exactly what you want. You might find you don't love the job, but there are a lot of other opportunities within the bank to leverage your skills. So that's number one. Number two, every firm, whether it's Nasdaq, we are a technology company. We hire a lot of technology individuals, as do the banks as well. But we have also a great marketing team. We have a great product management team. We have an amazing legal team and a regulatory team. So recognizing that there's a whole range of skills that are relevant in our industry. So just because you've chosen humanities, I was a political science major, it doesn't mean that you are not the right person to come into the industry. So definitely recognize that there's just a huge range of skills in the industry. And then the third thing is, though, as you get into financial services, you're going to realize that hard skills are becoming more important. For us, development skills, engineering skills, data science skills are just incredibly important to our success. And so that has become, our major area of recruiting. But at the same time, you can learn some of that on the job. So you come in with a humanities degree, well, learn Tableau, learn new regression analysis tools. Maybe there's obviously light coding capabilities that exist today. Don't assume that you can't learn those things, or you shouldn't. You should learn those things even after you graduate, so that you're positioning yourself for the future of the industry.
Thank you. I think that's great. So I know we have about 10 minutes left, and I wanted to make sure that I was able to give you some of the questions from our students. We have so many great questions, so I'll try to get to all of them, but and some of them we've already answered. So let me go right into what do you think about the effects market makers and individual investors have on the market?
Sure. Well, if we look at market makers first, so what do market makers do? What they do is they commit capital throughout the day into the markets through the orders that they place in the markets. So, and there's small amounts of capital in any given moment, but it adds up, of course, over the course of the day. So they're there as the constant intermediary. They're there to be the liquidity providers and to make it so that you have instant access to liquidity. But they're not there to build a position in a stock. They actually want to try to get flat by the end of the day. So they're in and out of stocks throughout the day, adding their capital, taking their capital out, adding their capital, taking it out, so that they can create that ability for an individual investor or an institutional investor to have instant access to liquidity. The second thing they do is they create transparency in the market. So they're putting their quote out there for everyone to see. Not everyone does that. So market makers are the key driver, not the only driver, but a key driver of transparency in the market to create that bid-ask spread. And people kind of underestimate the role of market makers, in my opinion. I personally think that regardless of how liquid a stock is, market makers that capital that they commit at any given moment is a really, really helpful element of market liquidity and stability. So that's a market maker. Now, many market makers today do that all electronically. So we call them electronic market makers, and most market makers are using electronics to drive that order flow and drive their routing behaviors. It's a very sophisticated part of the business, but it also is very important. Individual investors come in with their own interests now. They could be a day trader, which is a little bit more, I'm in and out throughout the day as well with my own money, my own personal money, or they can be true investors coming in and taking a position and saying, I think that this company is going to do well. Well, those individual investors are millions and millions of them. They provide, again, another key source of liquidity, and those orders tend to go through the intermediaries into the market. And so they also are a key driver of transparency. It's just that they have a different intent. They're there to take a position and add to their savings, right? So I think that they're all so important. And then the third key component, of course, are institutional investors. They're taking large positions. They're going to work some of that over and outside the exchanges in what we call dark pools and other ways for them to, frankly, not be as transparent with their intent. They're there to build big positions. So they have to be careful about moving the markets inadvertently, but they will also leverage the exchanges to drive order flow into the exchanges as well, particularly at the open and the close, to create those auctions that really are wonderful price discovery events for stocks. So they all play a role, and I think it's a critical ecosystem for it all to work together.
Thank you. What was the biggest unforeseen obstacle that you encountered while taking Carlyle Group public, and how did that experience shape your career trajectory?
Sure. So from 2011 to 2014, I went to serve as the CFO of the Carlyle Group, and during that time, Carlyle went public. So it was a wonderful experience for me because as CFO, it's kind of oftentimes a once in a lifetime opportunity to take a company public. And what that meant for me was really building out we had to, obviously build out the control environment, Sarbanes-Oxley, build up the IR team, and really mature a lot of our financial systems and reporting, which is very common for any company that's going public. And so it was a wonderful chance for me to build out an operation and build out the technology to support Carlyle as a public company. And then at the same time, go out and really market the company the right way. Really, how do you hone in? And I remember our first time that we started working with the investment banks, our deck was like 75 pages long. And they said, well, you're gonna have to get it down to 15 to 20. And we're like, well, I'm never gonna be able to do that. But you know what? We did. So really learning to hone the story and get to the important parts of the story. It was just a spectacular experience for me, and it really matured me as an executive. It matured me as a leader in terms of driving change, and it allowed me to see another part of the industry. So walking in and really understanding the private equity industry has been extremely helpful to me when I got back to Nasdaq for a few reasons. One is just understanding how they analyze investments, how they consider returns. As a company that does acquire other companies, we found that it's helpful for me to understand, frankly, how do financial sponsors look at deals. The second is just understanding the asset management side of the house. It's just such an important part of the ecosystem and getting an inside view into that. And then the third was understanding what it takes to take a company public. Gives me a lot better understanding of what companies are going through as I'm talking to them about Nasdaq and what solutions and services we can offer them to help them be public companies. So it's definitely enriched my understanding of that as well.
Thank you. And I know we have tons more questions, but I think we're at the top of the hour. Unless Adena, you want to take one more?
Yeah, we take one more question, and then
they will all probably end up being a bit more complex. So I'll give you just this one that I find to be pretty interesting. What do you think that the effect of quantum computing would be on markets?
Well, we think a lot about that. So
I know.
So quantum computing is that, that kind of gold star out there that is potentially unreachable, but potentially reachable. So you definitely are hearing more and more from the large tech companies that they are getting closer and closer to true quantum computing. So when we think about the effect of quantum computing on the markets, if you have a computer that can predict every outcome that could possibly occur all at once, and it makes it so that you've got a predictive model that looks at thousands of different outcomes and synthesizes it to find the quote unquote right outcome or the best outcome. And people are using that in a market environment. Theoretically, you can create perfectly efficient markets. And the inefficiency in markets today can be that's, one investor has one theory and another investor has another theory. Could be that they're just not synchronous in time. It could be that news comes in, it takes a while to filter into the market. But in a quantum computing world, if all of that's happening instantaneously all the time, then you have, on the one hand, potentially too much convergence of thinking, and therefore could make it so the markets actually don't have equilibrium, or you could have perfectly efficient markets where everyone's using that and news gets integrated and everything gets integrated in an instant. Now, I see that as a really, really interesting revolution in the markets. I think that the other side of it is also making sure that from the defensive side of managing markets and market integrity, that we have to be as advanced or more advanced than the others that are coming into the markets to make sure we can properly protect the integrity of the markets. And so we're in active dialogue with firms around quantum computing to make sure that we're bringing that kind of technology into our defensive technologies as fast as we can.
Thank you so much for that. Thank you for all the students who submitted questions. Apologies if we didn't get to all of them. They were all great. There was a few that came in, Adena, that I wanted to tell you that that they look up to as a role model. And so thank you for that. That's always great for students to hear. And thank you for your time and for being so open to answering all of our questions. And I know that this is hugely helpful for not just the students, but anyone else listening, me included. So I thank you so much for your time. Janet, I will kick it back over to you.
Terrific.
Well, thank you all very much.
And really just what terrific conversation, such great advice for our students and for the alums watching. And, Adena, as you said, Frank Zarb, the namesake of our school, is such a terrific role model and mentor for all of us. And so we're very thankful that we always have his support, and so appreciative of your joining us today. And Trustee Mendes, we thank you for being with us as well, and so grateful, all of us at Zarb, for all of the trustees and the support of the business school and making events like today possible for our students to get to hear from top executives like yourselves. And so thank you again for being here. For all of you watching, thanks for joining us. Obviously, we look forward to seeing you again at other events, and I hope good health to all and stay safe. Thank you.
Thanks, everyone.
Thank you. Bye-bye.
Thank you. Bye-bye.